We're going to get straight into some company presentations now. I'm delighted to welcome Highlands Pacific, who spoke at our first conference way back in 2014. We're delighted to see Craig Lennon, their CEO and Managing Director, back again to tell us about it.
Good morning, everyone. It's always a bit concerning when you follow a commodity analyst, just in case he says the wrong things about the commodities you're going to talk about. I've titled our presentation Position for the Battery Metals Revolution. I think there are a number of metals that people include in battery metals. The ones I'm referring to for Highlands are cobalt, nickel and copper. The electric vehicle and battery storage revolution is happening, and I don't think anyone's going to dispute that. The million-dollar question is how the take-up is going to play out. I'm certainly not an expert in this field, but there's a lot of information available suggesting that the take-up of electric vehicles over the next decade is going to be significant. 2017 saw several governments around the world make policy statements on the enforcement of electric vehicles, and automotive manufacturers are also coming out with future target sales. The graph on the top left here shows that we could be in a world in 2040, just over 10 years away, where half the vehicles are electric. The growth in electric vehicles is going to lead to an increase in demand in some metals. And the graph on the bottom right here looks at a growth in a hypothetical world where there'd be 100% saturation of electric vehicles. Cobalt growth of nearly 2,000% and nickel growth of 100%. Just looking at cobalt firstly, the demand in recent years has been increasing, and these graphs show that the demand is continuing to increase. Whilst there's been an adjustment to supply, as you would expect, to date it's not been enough for the demand in the future years. This is leading to forecast deficits, and when you have deficits it tends to push the prices up, and already this has started to occur. Cobalt's gone from $20,000 a tonne, and now 18 months later over $90,000 a tonne. It'd be naive to think that the market is not going to react to these increases in prices led by deficits. That's what the market does. But in the cobalt, keep in mind that a significant level of production, over 50% in 2017, comes from the DRC, along with a significant level of the world's reserves, also held by the DRC. In the coming years, the DRC is planned to bring on further production to the extent that it will be producing over 75% of the world's cobalt production. But I put it to you, what if the issues in the DRC impact production there? The DRC is not a stable political country, and the market doesn't like the use of child labour that's reportedly used in the DRC. Turning to nickel, nickel's going to be impacted by electric vehicles growth, maybe not significantly in the immediate years, but certainly in the medium and long term. And don't forget, the current markets of nickel are not going to disappear. Just as Ian said, stainless steel currently uses about 70% of the nickel produced, and that's continued to grow, if only modestly. Also throw into the nickel mix, the issue of only certain production being able to go into the battery demand, and the fact that the makeup of batteries appears to be favouring an increased nickel content due to the properties that nickel brings to the batteries. And finally, copper. Now, it's a metal that's not at the forefront of people's minds when we think about battery metals, but a simple fact is that the electric vehicles, when compared to the internal combustion vehicle, use more copper. Just a slide on the prices for these three metals that I've mentioned over the last 3 years. You can see there the cobalt graph is spectacular, a 300% increase. Nickel's starting to show signs of an upward trend, and likewise copper. So what does that all mean for our company, Highlands? It means that we're leveraged to a growing market, the battery metal market. This table here details the Highlands Inventory. It's our share of the projects that we have, and it gives us 3.4 million tonnes of copper, 7 million ounces of gold, 106,000 tonnes of nickel, and nearly 11,000 tonnes of cobalt. That's our share of contained in-ground metal in our projects, which is fairly substantial for a company that's got a market cap of US $60 million. I guess I'd also like to highlight that in terms of the nickel and the cobalt, we are producing these metals now. We're not exploring for them like many other companies, and we're not hoping to develop a project like many other companies. We're producing nickel and cobalt right now. At Highlands, we have interests in 4 projects, all in Papua New Guinea, where we've been operating for over 20 years. We've got the Star Mountains copper gold projects, which we own 100% of, and we're currently looking for joint venture partners. We've got a 20% interest in the massive Freda River copper gold project, which is in for permitting with the PNG government. We've got 100% ownership in a early stage exploration nickel and cobalt laterite project called Siwa Bay. And finally, we've got an interest in the world-class Ramu nickel cobalt mine, which is achieving record production rates in excess of design and at low production costs. A quick snapshot of the corporate position. And currently, we've got about US $7 million, and we've got a market cap of US about $60 million. I'll now go through our Ramu project in a little bit more detail. I'm not going to go through the other projects just because of time constraints. Ramu is the project that provides Highlands with the leverage to the electric vehicle and battery storage revolution that I've just been talking about. And again, it's in production. It's producing nickel and cobalt and lots of it. The project's a joint venture between ourselves, MCC, and the PNG government and landowners. MCC are the operator and manager of the project, and they were responsible for the financing and construction of the project. MCC, for those who don't know, is a Chinese state-owned enterprise, and since the merger with another Chinese SOE, Min Metals, it's now one of the largest mining groups in the world and a Fortune 500 company. Ramu's got a significant resource. It's got 124 million tonnes of nickel ore at a healthy grade of 1% nickel and 0.1% cobalt. Current mine life is about 15 years based on reserves and over 35 years based on resources. The Ramu operation started production in 2012, and as you can see here from this graph, it's ramped up steadily. 2017, the project achieved record production of 34,600 tonnes of nickel. 2018, the target's 34,000 tonnes of nickel, and this will continue for 30 plus years. First quarter of 2018 shows that we're on track to achieve this. The project also produces cobalt, usually in the ratio of about 10% to the nickel production. 2018, the project produced 3,300 tonnes of cobalt, and this is the target for 2018 and again for the next 30 plus years. This chart details what the production in Ramu means for Highlands with our interest in the project. So currently we have an 8.5% interest in the project, and these 3 bars on the left-hand side here detail the annual cash flows for Highlands after operating costs and sustainable capital at various commodity prices. So at the average prices that were achieved in 2017, we would receive $14 million US each year. At prices which, a couple of months ago were spot, that 14 million increases to $25 million. At a potential upside case, which we put in there, which is now pretty close to the spot price, that increases further to about $33 million each year. And I can tell you for the first quarter of 2018, we're very close to that 3rd bar in terms of cash flow generation. These cash flows go in part to repaying our debt on the project, and when that occurs, we move from 8.5% to 11.3% at no cost. The graphs on the right-hand side detail what these annual cash flows will be for those same 3 commodity price decks for an 11.3% interest. These are pretty substantial cash flows for a company that has a market cap of only US $60 million. As I said, I won't go through the other projects we have in detail. In summary, the electric vehicle and battery storage revolution is driving demand and price growth for some metals. Highlands is a company that provides investors with leverage to battery metals, namely cobalt, nickel and copper, plus we have a lot of gold. We're also producing cobalt and nickel now. We're not exploring for it, and we're not hoping to develop a project in 5 years' time. Our metal inventory is substantial, and our annual cash flow potential from our interest in the Ramu nickel and cobalt mine is also substantial. Thank you.